everyone. It's a great pleasure for me to introduce a new guest today, Jason Fernandes. We met in Bangalore recently during India Blockchain Week, and we had an amazing time during an amazing party at that point of time, right? It was like a meeting of like minded individuals who share the same passion in blockchain and also some of the old school boxing and MMA fans as well. We had a lot of discussion. So just like a very brief introduction about Jason. He's an entrepreneur, has run multiple startups. He's a blockchain speaker, crypto analyst. He's invested in tens of startups in the crypto space and with a very significant amount. So, any blockchain startups who are listening to us today, this would be something you would really want to listen to because he'll be able to help you out a lot. He's the CBO of NFT Tech, which is a publicly listed company deploying funds in the Web3 space, and currently the co-founder of Ad Lumen, and which is an NFT enabled Engage 2 on Launchpad. So essentially, thank you so much, Jason, for joining us, and would love to hear about you from you as well. What are your takes as well?
Yeah, thanks a lot, Harsh. Yeah, it's a pleasure being here. It was really cool bumping into each other, into you in Bangalore. I think I work in a silo, like I just kind of work at home and really focus on what I do. So very rarely get a chance to meet other people in blockchain and cryptocurrency and just kind of talk shop. But I think like we got that opportunity and it was really fun. So we just ended up, I think spending most of the evening sort of chatting together. So yeah, it's great. It's great to catch up again and look forward to the conversation.
Awesome, awesome. So I'm not sure if you just heard a few hours back the news kind of broke out that SBF was actually caught by the Bahama authorities and they're planning to extradite him to US. What are your takes on that and the entire SBF fiasco which started last month?
Yeah, I mean, I heard that. I did hear that he was just arrested. We're actually Facebook friends, so I guess I'm not getting any messages from him anytime soon. I'm guessing, unless they have a messenger in prison, which I doubt it. Certainly not in Bahamian prison for sure. But I mean, I think they're going to extradite him to the U.S. One of the things about scammers, and again, I'm not saying necessarily that he's a scammer because I think it still needs to be determined by court. But one of the things about scammers is that they're really good at being scammers, right? Like so, and part of being a scammer is just being really likable. So if you look at even like the craziest serial killers, they're just really likable people, and that's kind of how they that's kind of how they get you in the first place. And
Yeah.
like it's just been so strange the way he's reacted to this situation. I mean, most people expected him. And I think one of the reasons he's had a lot of success with the press and a lot of success like in public opinion to the extent that he has is because a lot of people didn't expect him to react the way he did in terms of going on this like media blitz. He was on our show, the RIBC Roundtable show. He came over there and spoke with CoffeeZilla was over there, so CoffeeZilla had a chance to question him a bit. Um,
Mhm.
and it's just very strange from a perspective of people that view these things happening pretty often because we expect them to go on the run, be really quiet and not comment, and just be really circumspect with the things that they say. But you have this guy just out there, just on TV, like back and forth, like he's everywhere, right? It's like, why? Come on, dude. Like, I mean, one of the reasons why he got arrested is probably people just got sick and tired of seeing him on TV and on interviews and stuff. It's like, come on, dude. Like nobody wants to hear anything from you right at this point. Like just chill. Nobody wants to hear what you have to say for a while, unless you're talking to us from like behind bars and explaining to us what went wrong. But
Exactly.
so he tends to be he's a really likable guy, and
Mhm.
that's been that's been very beneficial to what he's done. I mean, I think what he tends to but I've seen a lot of his interviews. I've been on on those shows, and
Mhm.
the thing is what he tends to focus on is he tends to paper over the fact that he moved funds um, from FTX to Alameda
Alameda.
for trading. He sort of tends to focus on how Alameda lost that money, which how that happened and whether it happened and all that is almost a secondary issue. Like the original sin is really him letting them have access to that money in the first place. And then he like if you see some of his interviews, it's like it sort of goes back and forth where he sort of says, oh, in the terms of service. Um, you can't like we don't consider it your money, but there's other terms of service where we kind of do. And but the thing is that it's sort of frustrating because nobody like a lot of these times people don't really tie them down like okay fine cool, these terms of service understood with generalized terms of service. These were specific to certain products. What about the people whose money was was not part of these products, but is still but their money is still being used. So like they didn't agree to this set of terms and conditions, right? Which is very specific thing to do. But he tries to make this gray area by being, oh well, it's all they're all terms of conditions, and this is what it said here, this is what it said there. And interestingly, I saw one interview. I think it was with George Stephanopoulos, where he talks
Yeah.
about a really interesting argument where he talks about basically like US dollars being fungible, right? So he was like, well, money's in this account, money's in that account, but US dollars are fungible. So nobody's to say that this money is from this money and this money is from that money, because they're all fungible with respect to each other. And I think Stephanopoulos, because probably was just kind of clean bowled by that, because he was just kind of like, wait a second, like, what do you mean? I'm not even
What the
sure.
hell is he talking about?
Yeah, exactly. So part of the thing, one of the reasons he gets away with it is because like a lot of the guys that question him aren't crypto guys, right? So like you have like a standard reporter that's got a list of questions that some crypto guy has probably worked out with him, and then this guy throws out like fungibility of US dollars, and the guy's like, oh wait a second, I have no idea how to respond to this. Let's move on to the next question. And this is what he counts on. So I don't know. We'll see how it all comes out. But I think even
It's
I think what's going to end up coming out is even Voyager, like, and these rescues, like he's on camera saying that the reason he did that was for to prevent general contagion, which may be true, but I think it's probably more to
it
contain
was more to
specific
cover his
contagion.
ass.
Yeah, specific contagion with respect to his own company, FTX, basically,
Yeah,
right?
yeah, yeah.
Opposed to like general contagion in the crypto industry. So I think a lot of stuff is going to come out. And
True.
one of the guys I'm really interested to see how this works out for is Gary Gensler, right? Because his sort
Yep.
of I guess his boss used to be Caroline Ellison's dad.
Yep.
uh, so I mean, I know that if my I just see that there's a lot of connections here, like Maxine Waters. There's so many cool pictures with him and Maxine Waters and stuff. I'm just going to be interested to see how everybody extricates themselves from this situation, because
Yep.
and I love Kevin O'Leary's stance, because he's like, hey, if he comes out with another
He's been
company,
completely honest about it, right? He's been completely honest about it.
he's
I fucked up.
I mean, Kevin O'Leary is like, he says, hey, if Sam had another company, I'd invest in it. If started another company, and he's talking about, he was actually just think day before yesterday, he was talking about starting another company with Ran Yunet, which is just like, they were talking about reissuing the FTX token, rebirthing FTX as a quote unquote DAO people owned exchange,
Hmm.
uh, and essentially people that lost money in FTX have an interest in this DAO, and I don't know if they called it a DAO, but it's what it sounded like to me. And then essentially FTX would be the largest consumer owned exchange, which is like, come on. I think now FTX, I mean, whatever brand value the name FTX had is long gone as
It's
well.
gone.
Like
Yeah.
FTX is now synonymous with fraud, right? So,
Yep.
like, I'm not sure if there's any value left to FTX other than the processes and I mean, you think about it. If you think about a company, an exchange in general, there's one aspect which is the mechanism of the exchange, which is for the most part fairly typical. Then there's a security layer, right? Because remember I worked on an exchange. Uh, uh, so you have like the actual the exchange aspect, which is a lot of it is open source. A lot of it is easily available. Then there's a security layer, which is has to be customized, and then there's like your customers and your business layer, right? Like the people who are actually using your software, your thing,
Hmm.
and then your brand. Like this is what goes into what an exchange is, right? And so if you
Yeah.
don't have like this is the mechanisms how far you do things is there's nothing really innovative there. So there's probably not a lot of value there, but the exception of but maybe some financial products that they created, but there's very little of value there. Then if you think about it, their value is actually the users and the business itself, right? And
Yep.
and
Yep.
and and without having that brand, then what's there that brings that together,
Yeah.
right? Those
There's no
users.
differentiator as such. The
Yeah,
technology is
exactly.
it's
It's
it's, it's
right.
very
Yeah.
easy. You can get for a few tens of thousands of dollars. That's not a real deal. So coming forward from that, where do you think is going to be the future of centralized exchanges going forward, right? And what kind of regulation, especially for the exchanges, because blockchain projects are a completely different thing. They have nothing to do with the exchanges, right? So
Yeah.
what kind of regulation do you see coming forward for the centralized exchanges, and what's going to be the future? Or do the centralized exchanges completely move to the decentralized route, have independent wallets, and people then have to pay like a monthly or an annual fee for hosting those wallets? What do you think would be the
Yeah,
future over
so
there?
I definitely think that there's always going to be space for centralized exchanges, like for sure. Think decentralized exchanges. I don't think that they're going to get the legitimacy that centralized exchanges have. I mean, there's something with being regulated that you just don't get from being an unregulated, DEX basically. So
Mhm.
there's one thing to be said for that. Um, in terms of where it's going, like CoinDCX, Sumit recently put out something about proof, not just proof of reserves, but also proof of liabilities, and how those things correlate, which I think is pretty much the way to go.
Mhm.
uh but then the question becomes like, who conducts those audits, and is those are those
Exactly.
audits fair and stuff like that. Like, I'll tell you something that's interesting. Like, a lot of people place a lot of faith in insurance. I remember when CoinDCX, so I think it was WazirX, partnered with one of these wallet custody solutions, and they have whatever X amount of insurance. Like, that stuff never works, right? Like, so I don't know if you've actually seen insurance, like, because at our exchange, we've looked at these custody solutions, and we've seen the agreements. My The co-founder, Winston at XRX, was telling me about this. Like, the agreements at the with the exchanges are such that they've created these situations where they will never be liable. Like,
They'll never be
they'll
what?
never actually be liable. Like,
Okay.
to actually pay that out, right? So, for example, let's say they're like a custody solution. The only way for money to leave that is, let's say, internal fraud, for example, where you have, like, let's say the co-founder ends up being a scammer, for example, right?
Mhm.
That's one way. That's a most obvious way, basically. But then there are other
Mhm.
ways, like, and all of those ways are basically exceptions within their contract. So, like, if this
Okay.
happens, then we're not liable. If this happens, we're not. So they've actually, like, they've had enough time to, like, think about this, to where there is no way that money leaves without
Got it.
them not being liable. So, like, if you if it, even if and fraud can continue to happen, basically. So, if you see the other exchanges, I think Binance does use a custody solution, an external custody solution, if I'm not mistaken, or maybe it's another exchange. But if you see, when they've had hacks and stuff like that, they've never actually been able to recover those funds from the exchange. On It's never happened that I know
Mhm.
of. It's never, like, nobody has ever claimed an insurance policy on an exchange for an exchange hack that I know.
Okay.
So that whole thing about, like, there's an insurance against these hacks. That's not true. I mean, it may be true in theory, but it's not true in practice, right? so
Even the
so
big names like Lloyd's, you're saying, they probably would not
no, it's
go
not
through
a
that.
question of, so I'm just saying that those things never get triggered. So
Okay.
the terms of service for the
There are
custody.
enough protection for the insurance companies to just claim deniability over there.
Yeah, I mean, that's literally how the product is constructed. So the product is
Okay.
constructed in such a way that funds literally cannot leave without a certain group of things, without, either there's only three or four basically gates, right? And each of those
Got
gates,
it.
uh, there is no gate where there's not an exception for them to say, like, oh wait, this happened because of this, and this is not covered by a service. You see what I'm saying?
Okay.
So, which is why, what I mean is, there've been several exchange hacks, right? I mean, it's not a lot, but there have been quite a few exchange hacks that I
Yep.
know of. None of these insurance proceedings have ever been triggered, ever.
Got it.
So, like, never has a wallet provider been liable for an exchange hack that I know of,
Mm-hmm.
right?
Got it.
Because whatever the specifics of that exchange hack, whatever it is, has always fallen within the exceptions of the wallet provider's custodial agreement. Basically, that's what I understand. So, like, the whole idea of, like, these exchanges having, insurance, like, really, it doesn't work in practice, right? Like,
Got it.
you're still trusting the exchange. After all, you are trusting the exchange and the exchange's security. So there's that. There are some exchanges that I feel very confident about. I mean,
So, so just coming back to the exchange part, right? Just yesterday, the news came that there was a lot of FUD around Binance, right? That they failed the audit because the audit player was not the guidelines which kind of Binance themselves gave. The audit player was not comfortable working with that. So, what is your take on that?
Could you say that last sentence again? The
Yeah,
something
so
that's
essentially, what happened is the audit company they were not kind of comfortable with the kind of guidelines which Binance put forward for the regulation purposes, because was giving their own guidelines for regulations, which obviously the audit player would not do that. They would have their own guidelines, and with their own guidelines, Binance kind of failed. So there was a lot of FUD going on around Binance yesterday for that.
Yeah, I mean, I heard there was a lot of fun happening today. I mean, I think an hour ago, CC tweeted out that USDC that they were going to stop USDC withdrawals, uh, pending like banks opening in the US, because apparently their pipeline for USDC involved a bank account in New York that happened to be closed, and essentially that there were a lot of withdrawals of USDC from the Binance platform, and they were having trouble with the liquidity, keeping up liquidity on USDC, so they had to wait for these banks to open up. So that to me seems strange because somebody like Binance should be able to just like ping one of their partners and be like, "Yo, send us a million USDC. We'll pay you back. Like tomorrow."
Exactly,
It really
exactly.
shouldn't be a problem. Like it seems a little strange. Like I can't imagine how much. I mean, at what a rate they would need to be withdrawing you. Customers would need to be withdrawing USDC for them to actually halt USDC withdrawals. But unless, but they're saying USDT withdrawals, BUSD withdrawals are working fine. So if you want to withdraw your funds, that means you convert into BUSD and
Yeah,
which basically plays right into what they want, right? I mean, they don't want
yeah.
it. So what's happening right now, as you're probably aware, is sort of a war between dang it, what's it called?
Circle,
There's so
circle.
many. There's so yeah, I know, but I'm thinking Coinbase. So Coinbase and Binance had war, and Circle is sort of in the middle, basically, because like
Yep,
Binance. So I think Coinbase stopped supporting USDT, and then said they're only going to support USDC, and then now Binance is like, cool, we're going to stop supporting USDC. We're only going to support USDT and
yeah,
BUSD. And so this is sort of like a stable coin war, which I'm surprised didn't break out earlier, but uh, so a lot of what's happening now is like so just the other day I think Brian Armstrong of Coinbase came out and said that he didn't think that that USDT or BUSD was as safe as USDC, which obviously would lead to an outflow of stable coins from USD and into USDC or USDT, which is obviously better
yeah,
for I mean, strategically worse for Binance, and so therefore probably better for Coinbase. So I mean, so it's like you have to take this with a pinch of salt. I think that the one thing I would say about USDT is that the number one trading pair in the world is BTC USDT. That's the number one
yeah,
trading pair in the world. So like if something would happen to USDT, like we would have a lot more problems. Like it
yeah,
would,
yeah,
I don't even know if a crypto market would support like something happening to USDT.
yeah,
Like
yeah.
the
That'll
entire
be a much bigger disaster, definitely.
Yeah, because if you think about it, most of these other pairs, the USDC pairs, and or even like the local pairs, a lot of times they're just transposed over USDT,
Yeah, yeah, yeah.
right?
Same happened with USDT as well today. If you must have seen today morning, right? USDT was depegged and was like $0.9 today morning.
So that's what I'm saying. Like that's odd, right? Because
Yeah,
you have so basically like even a lot of the INR pairs like in local exchanges or in Japan or whatever, right, they're actually transposed USDT pairs. So for example, they have a mathematical formula that converts what USDT is to the local currency, and then the local currency to Bitcoin, and then it makes a market based off of that. So it displays the price, it displays is the INR price, but that's really a
hmm,
transposed USDT price. You know what I'm
got it.
saying? So, for
Yeah, yeah,
example, if there was an issue with USDT itself, like forget the BTC USDT markets, a lot of the even local markets, INR, Japan
correct.
dollars to US Bitcoin would also fail because they all
Of
all
course,
are dependent on USDT in the middle.
correct.
So
That would be far more dangerous for the crypto exchange ecosystem. Probably would not affect the projects
it
much,
would
but for the
actually.
exchange business, it'll be completely devastating.
Yeah, so I was telling somebody. I mean, somebody was like, "Hey, do we think should we self custody our USDT or should we convert it to USDC?" I was like, "Listen, if USDT fails, we've got bigger problems." Like saying like it's like it's like Bitcoin is going to do really badly if something happens to USDT. There's statistics that show that.
Yeah,
Yeah.
because much of the value of USD, Bitcoin even right now is primarily due to the crypto whales and the institutional investors, right? And all of them trade primarily through USDT. If something happens to USDT and if Tether is gone, that would create a lot of liquidity issues in the market itself, and big
Yeah,
institutional guys will not take it.
exactly, liquidity issues, because you would have you would what would you sell your Bitcoin into, right? There are some
Exactly.
exchanges that only support USDT. There are some, I
Yeah.
mean, forget, and then even if you have a local currency, a lot of times converting that the currency in between is USDT, like the hidden currency in between the actual
Yeah. Yeah.
transaction is happening. So how would that happen? You wouldn't be able to convert local currency for a lot of these guys. They wouldn't. A lot of these guys don't even realize that's what's happening, under the hood when they're making these
Correct.
transfers. But if USDT fails, then that whole chain breaks down. So
True.
it's be a bad situation. But I don't think, yeah, that's what I'm saying. I don't think that USDT will fail. Like, I think XRX. So XRX, based off of the information that they provided um, themselves. Like the Wayne, who's the CEO of XRX, brilliant guy, a security guy, used to work at Proofpoint, which is a publicly listed company in the U.S. Um, so he actually did a deep dive into Tether's assets, and apparently they are basically over collateralized, at least as of a few months ago. So like
Mhm.
their assets were worth more than the USDT that they had issued. Now, it wasn't all cash assets. It was like, but it was fairly safe, treasury T bonds and things like that. Unless something has massively changed since then, I probably, and unless of course their own sort of audits were wrong, I would be, I think that they're probably okay.
All right. And I think one more thing which would probably help USDT is that people don't actually hodl USDT, right? They probably convert it to BTC and Ether and they hodl that. So it's not like they have to, create tens of millions of new USDT every month to kind of facilitate the liquidity issues. Probably that has a big role to play as well.
Yeah, I mean, supposedly, so there was a time when Tether was not 100% collateralized. So basically, they'd issued more Tether than they really had assets to back up. So then they said, "Hey, we're partially collateralized." It's like, "Hey, wait, what do you mean partially? Then you're like damn near the US dollar, then, right? Like, what, this is not a fractional reserve banking system."
Exactly.
So, but then eventually, they it was sort of some sort of hiccup. Matter of fact, they fired their auditors for a while. Like, this is a big thing. If we look at the pinned tweet on my Twitter, it's from like a few years ago. Like, and that was when essentially their auditors like quit, said, "Hey, look, we don't have enough information," and I was pretty concerned. But I think subsequently they've given out some information about USDT. But I mean, again, like I said, if something goes wrong with that, like the whole market is really screwed. I mean, unless you want to divide it by USDC. But I'll tell you from the perspective of, like, a company that's received their treasury and holds their treasury, like, we've taken investment in USDT. So tomorrow, if God forbid something happens with USDT, at least we could say, "Hey, you gave us USDT, and now the USDT XYZ has happened to it," right? Like, however, if we convert that to, let's say, USDC, or let's say we convert that to UST, so this is basically, I was speaking with Evan Luthra, also an investor in the space, a couple of
Yeah.
months ago. This is before the UST collapse. And he was like, "Hey, you have this treasury. Why you just keep it in US dollars? Like, why don't you just convert it to UST and throw it on Anchor? At least you'll have some decent return." And I think he probably pulled out his funds, but at the time we were speaking, he had quite a bit of funds on Anchor in UST. So
Okay.
can you imagine if I convert our treasury into UST, and then that whole collapse happened? Like, we would be in
Correct.
big trouble. Like, how would we explain that? Hey, yeah, we know you gave us USDT, but we thought we'd get a better return with UST, so we converted it, and now UST is falling apart, and yeah, your
Correct.
money
Correct. In
gone.
fact, just I'm not sure if you recollected a few days back, SBF actually went to an interview and Evan had kind of come over there that he had some money in FTX as well, and he lost a good sum of that money during FTX collapse as well. So
Who,
even that thing
SBF?
happened. Yeah, on FTX. So Evan had some money in FTX as well, and he lost a good chunk of money over there.
who SBF lost his from his own account in
No, 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 no. Evan Luthra, you mentioned
oh
right?
yeah.
Evan.
Oh, is that
He
so?
lost a
Evan
lot of
has
his money in
in
FTX as
FTX.
well.
I didn't know that. That's funny. I mean, I know Eloisa Marchesoni, who's like a really well-known tokenomics person. Like, I think she had like $4,000 in there. That was on the she had posted that on LinkedIn. Yeah, so quite a few people have lost some money. One of the things that you want to avoid doing if you're an exchange is losing money of influencers, because those guys those guys are going to get on YouTube, and then that's it for you. Like if
Exactly.
you're an exchange, like I think exchanges have learned that they'd rather lose money of people that don't have YouTube channels. I mean, I think that's one of their
True.
goals going forward.
True,
But
true.
anyways.
So during these current kind of turbulent times, right? What is kind of your advice to a lot of Web3 projects, right? Who must be kind of feeling that the exchanges are ruining the market for the rest of us, right? It wasn't their fault, and they are kind of being penalized of sorts, right? So what is your advice for them in terms of building right now, fundraising, or what kind of advice would you give them right now at this point?
Yeah, it's a great question. I mean, so I'll tell you just what I'm seeing, sort of from my experience investing. um NFT tech has invested in a few hundred companies over the last few months, actually. And yeah, I mean, what tends to happen, what's happened now is that, and then of course, Ad Lunam as a launchpad, we have some 40 projects currently in the pipeline, none of whom want to launch, right? I mean, rightfully so. The market has been really bad. Most companies launching are doing pretty badly, with the exception of certain companies. Like, so Reveal is one of the companies I advise. Reveal launched on KuCoin in June, sort of middle of the bear market, and they sold out in 2.5 seconds. It was just like a huge hit. And I think, people. So I redid the tokenomics when I came on board as an advisor at Reveal. I sort of worked on their tokenomics quite significantly. And I think that, I like to think that some of the retail investors on the end, like, really did a dive into their tokenomics, but I doubt it. I think most of these retail investors take their cue from institutional investors and where they come in, basically. So
Mhm.
what's happening right now is, if there's launches that are not if the launches are not successful, projects don't are delaying their launch, right? So if you're an
Mhm.
investor, your return, whether some of it gets unlocked at TGE or some of it gets unlocked post TGE, your return is tied directly to the TGE, right? So you have
Yeah.
you might vest 3 months post TGE or 6 months post TGE, and you might have a lockup period, and then you have vest over 2 years. Now, if
Mhm.
there's no stated TGE, then I literally, like, have no idea when I'm going to get that money back. Like, I have no idea, right? Not only that, but I'm basically betting on a market that I don't even know yet, because, like, every time you have a shift from a bear market to a bull market, you have a change in the projects that are successful and the kinds of projects that are successful. And so I'm making a bet for a project that might come into a bull market, might launch in a bull market that's different from the market that we are right now. So it's like really, really, really different calculus, right? So
Mhm.
it's really, really difficult, and that's why a lot of token investors are not making investments at all, because you don't know when your funds are coming back. Basically,
Yeah.
you don't know what market you're making the investment in, because the market that the project will evidently launch in would likely be different than the market that you're making the investment in.
Mhm.
And as a result, these projects are going to have a really hard time raising money, because it doesn't make sense for investors to invest right now. For
Exactly.
an investor, cash is king. The idea is, and by the way, a lot of investors are getting OTC deals. So companies are coming to VCs and saying, "Hey, like, very traditional companies that have tokens that have been, trading on the market for, let's say, a few years, we'll say, okay, look, our token is trading at 20 cents. It's been trading at 20 cents, an average of 20 cents for the last 2 years. We'll sell it to you for like 15 cents, but you're locked up for 6 months. So,
Mhm.
as an investor, that you're definitely going to get a return, pretty much, which is a very, very high
Correct.
probability. And this is not a startup company. This is a company. I mean, it's not a completely seed stage company. This is a company that's already has a token, been trading. They've been around for a couple of years. They already have partners, and so they're
Yeah.
probably good. They'll probably survive through the bull market. So a lot of the funds that would typically go to, let's say, startup funders in a bull market are now going to OTC deals, because keep in mind they can't release tokens without messing up the liquidity on their end too. So they want to raise another 200,000 300,000. They can't just do it by throwing on an exchange because the market won't support
True.
that.
Yeah.
So they're now looking at private investors and trying to see if that can happen. But on the flip
Got
side of that, you know, uh, those private investors, the money is, there's only so much, right? So if they're gonna invest in OTC deals, and they're not investing in early stage companies. So in terms of advice, like what does that mean from practical advice? I mean, I think what this is going to mean is a lot of companies are going to fail in this market. There are companies that unfortunately did not raise funds prior to the bear market hitting in, and may not have enough funds, to last through the bear market. So they're not going to survive, and that's how the game goes. It's how it works. But some companies are going to survive, and I think what differentiates the two are guys that sort of, first of all, they need to have some minimal amount of money having already raised, right? Because it takes money. Like you need to
Yep.
have a burn rate. You're going to have a burn rate regardless. So companies that
Mm-hmm.
are successful are companies that do have some degree of treasury and sitting that they're sitting on, and that focus on building and building their product, and then working on partnerships. Because in a bull market, you can go really far with anticipation, with saying, oh hey, this project is coming out soon. That's something that you can do, but that in the bear market, it's like, where is the project, right? Like if you
Correct.
it's
Yeah.
what's happened to a lot of companies is they said, hey, in the bull market, they were like, cool, we're raising all this money, and in 3 months we're gonna have a product, blah 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 blah. Then bear market hits, they're not able to raise any more money. They did raise a significant amount of money, but now it's like 3 months hence, and like all of a sudden the guys that put in money before are like, hey, are you guys building? What do you build? And these guys never had
True.
any intention of really building. They were just like, they just thought they would run on this like this cycle where they just keep raising money and then just throw it at without even having to like sit down and like hunker down and actually build, you know. And so a lot of those guys are having issues as well. So I think the focus should be like, focus on development, focus on fundraise, like don't focus on fundraise, I'm sorry, like focus on development, focus on partnerships. Any time that you spend fundraising is kind of wasted time, in my opinion. Like I know a lot of companies, and this is the thing that it's sad, and I try to advise companies, but they sometimes they don't take it. The thing is that they're not going to have a you're not going to be able to raise money easily, especially if you're raising via tokens. Keep in mind, you're raising via equity. It's like the kind of people that you're dealing with is wholly different, I mean.
Yeah.
So it's possible that you might be able to raise funds because they have like a different time frame within which they want to
Yeah.
see their returns. So that's sort of like a whole different ballgame. If you're raising via tokens, uh, pretty much no invest. It's really not a good time for any investor to put in money, basically, if you're raising via tokens.
Got
So
it.
so whatever, if you spend like days get working on your pitch deck, working on your pitch, contacting investors, because that's what
Mm.
you think you need to do, that's all going to be wasted days, and it's going to hurt your morale, because you're going to spend 100 days chasing after like $20,000, and
True.
you're gonna spend like multiple phone calls and multiple like emotional damage. In fact, and when the best path is, if you have any treasury at all, just focus on building, focus on the partnerships, and when the market comes, then you spend 1 week and you raise that same amount of money. I mean,
Correct.
for for Ad Lunam, we raised like $1 million in like 24 hours almost, and like 2 million in about 5 days, and that's actually because we slowed it down, because towards the end we wanted to make sure we had some more allocation. So,
Got it.
but if we had to do that in this market, it would take us a lot longer, and certainly be a lot more effort, right? So like, why focus on this if you can focus on anything else? Don't focus on fundraising. And this is something like nobody listens to me on. Like, yeah, because a lot of these companies, unfortunately, they just don't have any funds, and so without fundraising, they're nowhere. And so then what ends up happening is it's a race to the bottom, because guys
Yeah.
like, oh, my valuation is 8 million. The guys like, oh, my valuation is 7 million. And then it
Yeah.
becomes like, again, a race to the bottom. So I think entrepreneurs in Web3 should just sort of back up, like take stock, sort of build. Now's the time to sort of be in a cave and work on what you need to work on.
Got it. Got it. Very interesting points, and definitely agree with you with the sentiment, right? Investing in that, and even so, I've been a part of this IO cycle as well, right? In the past company, with our token. We used to do a lot of IEO fundraisers. Just a year back, the situation was completely different, and projects were getting funded right, left, right, and center. And right now, things have completely changed. So we were still kind of following the SAFT kind of method of fundraising, right? Do you still? How confident are you with the SAFT mode of fundraising, or do you think there could be some more innovation happening on that front? Because I personally was not very confident. It's just a piece of paper, and we are kind of essentially at the mercy of the founder. That in his goodwill, he'll kind of disperse the tokens when the TGE happens, or if the TGE doesn't happen, he can simply kind of whistle away with the money. So, do you have some sort of protection mechanisms in place? Or what kind of an alternative do you see to SAFT as such?
So look, I don't see that as a I don't see that as a potential. Yeah, I don't see that as a potential problem, and I'll tell you why. Because when you invest in a company, you're trusting the director. Period.
Mm-hmm.
Right? You're trusting the director on any number of issues. You're trusting him to give
Got
you
it.
the tokens. You're trusting those tokens to have value,
Yeah.
right?
Okay.
And you're trusting the founder to handle your funds. So I'll tell
Mm-hmm.
you, I won't name any names, but I had a Web3 founder. So I was speaking with a PR guy, and he was showing me the work that he'd done in PR for blockchain companies. He showed me this article, and I happened to know the person in the article, and I was like, "Oh, hey, I know this person." And they were like, "Yeah, yeah, yeah. These are the other blockchain articles that we put out." And then they said, and this person is a director of a blockchain company, and he was like, "Yeah, this person is great. I mean, like every time I have to put out an article for him, like, if he owes me 1 lakh, he'll tell me, hey, write me an invoice for 5 lakhs, and I'll send you 1 lakh back." So I said, so he says, so yeah, so he always like every time I get an article, like he always like make sure I'm taken care of. I'm like, that's not good. That's called embezzlement,
Yeah.
right? So it's basically saying like invoice me for a higher amount so that I can like keep some money and I'll kick you back something. That's what this founder is doing, and this is like a Web3 founder, like that's
Mm-hmm.
currently in business, right?
Mm-hmm.
And he's sitting on a treasury. So forget whether he's going to give out these tokens, that like who knows whether that there's even going to be any money in that account the way this guy is spending it, right? Like
Got
he's
it.
basically treating the money he's raised as his personal piggy bank. And because he's a director of the company, oftentimes there's not anybody who's like looking into it. There's not anybody who's like checking his books, really.
Mm-hmm.
So if you're an investor, you're trusting the director like implicitly on any number of things, basically, and the least of which is like to give you your tokens on time. Like that's not even the problem. The problem is like him making him not embezzling money from the funds, him building the company, him not running away with the money. Those are things that like are much greater concerns for me than whether they actually give you the tokens, in my opinion.
Got it. Got it. Got it. Very interesting viewpoint. Is that possible in the token front as well, embezzling through the token side? Because I assume on the chain everything would be recorded, right?
No, it's not a question of the tokens being, because keep in mind, like when you raise funds based on a token, let's say on a SAF. Now you have fiat, like well, you have USDT. So
Yeah, yeah.
now,
So the
so
USDT would be able to track, right? If
yeah, who's tracking it, and who's and who knows how much money the company spends? Like
got
who
it.
knows? Like there's no like even if you can see that the company is spending 30, $40,000 a month, or $100,000, or $300,000, how do you know what they're spending it on, or whether those are justifiable things? Like who's doing an audit?
Got it. Got it. Interesting. Interesting. Um, that was a very interesting viewpoint. Really, kind of gives a lot to think about, right? Kind of what's going on in the space essentially.
Yeah, I mean, this is why when you're making an investment, like you're like the founder is everything. It really is. It really is. Which is why like people wonder why they say it's a good old boy network, and if I'm a new star founder, like I don't get anywhere. It's because you haven't paid your dues, man. It's because
True.
nobody knows that you're not going to take the first 50,000 you get and like go blow it on something. You know what I'm
Got
saying? Or
it.
like or,
Yeah.
or like when like after an investor knows that a founder has had access to, let's say, millions of dollars of funds, and
Mm-hmm.
he hasn't blown it, like you get street cred for that, and that's
Got
how
it.
it should be, because in theory you could have just spent it, like, so you earn your it's like you get your credit report, right? It's the same
Yeah.
thing basically. Like it's you earn that by being in the industry for a while. And the thing about the crypto industry, the reason why people value longevity so much is because it's like if the guy's been in the crypto industry for 1 year and he's a scammer, that's possible. But like 2 years, 3 years, not happening, right? Like
True.
that word gets around like really quick.
Very
Like you
quick,
don't
yeah.
scam somebody like the word. So if a guy has been in the industry like 3, 4, 5 years, he's had n number of opportunities to scam. He's had n number of opportunities to like that basically. So the fact that he's
Mhm.
still around is indicative of something. So if there's a measurable difference between investing in a founder that's been around 5, 6 years, in the zeitgeist that people know about, versus investing in a founder that, let's say, just got out of college, nobody knows anything about him.
Got it.
So that's how these things happen.
Makes sense. Makes sense. Thanks a lot for that insight. Really, kind of gets you thinking about a lot of important things as well. So, what are your final thoughts? To final advice to the projects who are building right now at this point of time, right? What should they do? What should they not do? Kind of pitfalls they should be careful about, and how can people reach out to you?
So the first thing I would say, for people that have managed to raise money, is to treat the money like they would treat their own, but not like they would treat it like. Okay, let me rephrase that. Don't treat it like it's your money, but treat it like you spend your money. Does that make sense? So so I never I don't. You shouldn't think of it as like, oh hey, this is company money, I can buy it. Like I'm not really worried about it, or like this. Like if you wouldn't buy it yourself, if you wouldn't spend the money yourself, then don't charge a company for it. Basically, like that's sort of
Mhm.
like thing you should think about it. And so that's something that I sort of try to live by. That's important for like newer companies. Another thing to sort of do is like really think about how much you will need to raise, because when you're raising funds, a lot of companies will raise the maximum that they can raise. They'll just say, oh, they're raising 5 million, we're raising 6 million. Well, we know if you're doing that via tokens, that means that you have less tokens left, right? Like, so I usually like seeing like under 18, 19% of the tokens to be spoken for before the IDO. Like I want
Mhm.
less than 20% ideally, right? But there'll be companies that like they'll sell like 50% of their tokens. It's like, hey, hold on a second, why are you cashing out? So like if you're raising 5 million, which is like, so most companies raising like 3.5, somewhere around there. If you're raising five, why are you raising the extra 1.5, right? Why are you raising the extra 2 million? Like,
Mhm.
need that? Is that something you're going to spend over the next 2 months? And if there's a justifiable reason why you're doing that, where you really need the money, okay, cool. But if you're just raising it to raise, then you're telling me that you don't think your coin is going to do anything when it hits the IDO, right? Like if you think your coin is going to 10x, then why would you be selling it to me at a 90% discount 2 weeks before your IDO, right? If you truly believe your coin is going to 10x, you wouldn't be doing that unless you'd be selling me the minimum allocation you could, basically,
True.
just to get you past to make that. It's because to bring you on board as an institutional investor, so that I
Mhm.
got you cap table. That's a minimum that you'd want,
Mhm.
and you wouldn't want any more money, basically, because all those are tokens you can sell at a much higher rate later. So like I would live my
Got
usefulness
it.
once I'm on your cap table, basically, as an investor.
Got it. So that was quite an interesting point as well, because most of the times they're like, get the money as quickly as possible, and if they don't have interest of building, they'll probably try to raise too much in the beginning itself, and that kind of puts the entire project in jeopardy.
Yeah, so I tell you, with Ad Lunam, when we raised, we had one investor that wanted to buy our entire round out, like $2 million round, and basically we gave less than $100,000 to each investor. I think 100, 200. I think no, actually that's not right. I think DCI gave like three. I think they're like our larger investors. I think they have like 300K, something like that.
Hmm.
But for the most part, and that again is because it was one of our first investors. DCI was like our lead investors. So we started giving out much less allocation as we went along, and that was basically because our strategy was to develop our investor network, because we knew that we needed to support projects that we are launching, and then to sort of get the widest institutional buy-in that we could. So if you look at adlorm.cc, you look at the investors. I think there's something like 30 investors over there. That's OIG, DCI, Gains, some of the biggest names, as investors. Moon Carl is on there, Carl Moon. And the reason that is because we want to make sure that everybody had a little bit of allocation. So we never sold more. Like almost everybody, I would say, got less than they asked for. Most of them got significantly less than they asked for in terms of allocation.
Got it. Got it. Good. That's a good strategy as well to kind of get a buy-in for them. And once the project start listing, they would then be committed to you like a soft commitment of sorts. That's a good
Yeah, I
strategy.
mean, as I said, exactly. So now we increase our network for be able to better support projects that we launch, right? So then we can, bring them to our
Got
network. So we not only grow, so we have now the investors that have invested in Adlunum, but then we also have additional investors that are part of our investor network, which we refer projects to, But again, I think all this is slowed down now. There's almost no funding going on from a token perspective, mostly because
it.
launches are doing so poorly. But I think that will change once these companies start being able to give us TGE dates and stuff like that.
Got it. Got it. True, makes sense. Thank you so much, Jason, for your time. This was, really an interesting session and a very insightful session as well. Any final
It's
thoughts you want to share? How people can reach out to you if they want to have a discussion with you or
sure.
anything?
Sure, yeah. I mean, if they just Google my name, Jason Fernandez, my Google Knowledge panel should show up, and then there's like individual. That's sort of the best way, that because otherwise you might find somebody else's stuff come up. So if you see my knowledge panel, then those social media is me. So they can connect to me on Twitter at TokenJ, D Jason Fernandez on Instagram, and Jason Fernandez on Telegram. But yeah, anybody can feel free to reach out. I think what I focus on mostly is a lot of tokenomics. Advise a lot of projects in the lead up to their own IDO. A lot of companies come to me when saying that they need an investment because they're at the stage where they've developed a product, and now they think their next step is raising funds. But before they get there, what they really need often is a layer of advisors, because they really need to be vetted. For an investor, they need to be vetted by guys who are already in the crypto industry. So like you can have a gaming, let's say a gaming, like a guy who develops games can develop like a great metaverse game. But in order for you to
Mm-hmm.
market it as a metaverse and raise funds as a metaverse with tokens, you need to basically have tokenomics in there. So you need to have like an advisor that helps you with tokenomics. Then you need like a
Mm-hmm.
set of crypto advisors, for example, that will like bring the right market to you. So there's a whole crypto layer on top of whatever you're doing. If you're going to try to access the Web3 space, like there's your business, and then there's like the Web3 like layer that you have to add. And so that's
Yeah.
something that I help a lot of companies with, and that's I guess what a launchpad does as well in terms of like helping companies add that sort of extra layer, that makes them ready for to actually launch as a token.
Got it. Yeah. Building a product is one thing, and making your product customer ready is completely different thing. That's a completely different beast, which most kind of founders struggle with.
Yeah, but even crypto ready, right? Like, so for example, let's say you make a metaverse, let's say you make a game. Well, now you have a game, and then you say, okay, cool, I want to create these tokens, but how does those tokens connect to the game? Like, how does the gamification of those? And now you have to like merge the two, basically, right? Then you have to like
True.
start characterizing the game in terms that the crypto investors would understand. So you talk about introduce things like staking, introduce things like locking of tokens and stuff like that, and like how these mechanisms of these things happen. All that is stuff that happens from somebody who's outside of the gaming scene, and more from the perspective of like of a tokenomics and analyst, right? A guy who understands how utility is added via tokenomics.
Got it. Got it. Cool. Thank you so much, Jason, for those insights. Really incredible, and especially good advice for projects. Start focus on building right now, because fundraising was going to be a huge waste of time at this moment. So thank you so much, and
Thank
really
you so
appreciate you
much.
joining.
Pleasure talking to you as always, man.
Likewise, we'll definitely stay in touch.
Thanks.
Take care. Bye bye.
All right, man.